is going on, everybody? Welcome into another edition of the Daily Energy Newsbeat Stand-Up here on this spooky Tuesday, October 31st, 2023. As always, I am your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Dallas, Texas, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, EnergyNewsbeat.com, Stuart Turley. My man, how we doing today?
Hey, it's a beautiful day in the neighborhood, and tomorrow's Halloween. Are you going to go as Chewbacca or an Ewok?
I live every day as Chewbacca, so I'm probably gonna go as I'll go as Luke Skywalker for tomorrow. It's my lovely hair that makes me like Chewbacca. If for those of you wondering at home, but no, for everybody listening to this, happy Halloween. We hope you guys had a great, mainly for everybody, a fun weekend, but we are here to bring you the news nonetheless. On Tuesday, Stu has an excellent show lined up for us. First up, Germany's Scholz says that his country is willing to invest in Nigerian gas and minerals. Next up, gas flows stop to Egypt. Dun, dun, dun. So we'll see what's going on in the Middle East. Might have something a little bit to do with where prices went today. Next up, we'll come back home. Nothing like a good Biden Newsom story. Congress must take California out of the driver's seat on electric car mandates. This is a really great article by The Hill, kind of overviewing what's really going on in the EV market and what's about to really take California down. And then finally, Stu's favorite, uranium demand hits decade high as nuclear renaissance gains traction. He will then toss it over to me, and I'll quickly finish with some of the oil and gas finance stuff. On Friday, we did see Chevron and Exxon drop earnings, though everyone's really more worried about the M&A deals, but we've slowly been seeing some of these earnings come out. So I'll quickly touch on some of the news and notes in there, talked about what happened to oil and gas prices today, and let you guys get on out of here and back to work. But before we do all that, guys, remember, the stories, news, and analysis you are about to hear is brought to you all by the world's greatest website, EnergyNewsbeat.com, the best place for all of your energy news. Stu and the team do a great job of curating that site, making sure it stays up to speed so that you can be on the tip of the spear when it comes to the energy business. You can email the show questions at EnergyNewsbeat.com. You can follow us, Apple Podcasts, Spotify, wherever you get your podcast. YouTube, you can hit us up at Energy Newsbeat. If I was a 16-year-old YouTuber, I'd say smash that like button, but I'm not, so I'll refrain from saying that and just say that's the best place to go subscribe to us and stay in contact with the show. Again, EnergyNewsbeat.com. Check us out, dashboard.energynewsbeat.com. New data news combo that we're working on. Give us an idea of what you want to see in V2. I'm out of breath, though, Stu. Where do you want to begin?
I think this is going to be a great one here. Germany's Scholz says that his country is willing to invest in Nigerian gas. And Michael, I know he's sitting there with one of the leaders from Africa, and I know he's not saying, I see nothing. I see nothing. Okay, German Chancellor Olaf Scholz says that on Sunday his country's willing to invest in critical minerals and natural gas. This is a quote from the Nigerian president. There's a willingness to invest, especially in critical minerals. This is actually from Scholz, told reporters. If we're successful, then there's better chance of exporting the produced gas on LNG as well. And I'm getting to the point where my interview, the staff is about ready to roll out the podcast with the Secretary General of the African Oil Producers Organization. This one's really chapping my chicken, Michael, because let's put Africa first instead of having I see nothing Scholz run down there and try to take more critical minerals from these folks without trying to say, hey, let's put in some natural gas there. And all they're building is the natural gas LNG exports. That's what bugs me. This is not a win-win for Africa.
No, because they want to come in and exploit the resources. Now, Nigeria has all of the the willingness to want to have outside Western development come in because they've seen what it's been able to do to their oil and gas business. Remember, the Nigerian oil and gas business is propped up mainly by Western influence. Not that that's a bad thing. It seems to have worked out for Nigeria. The problem is this is not what's going to happen around the country. What you're going to see happen around the country is, outside Western nationalization of the resources that really need to be flowing back. We don't need to be sending oil and gas and LNG away from Africa. We need to be drilling it, producing it, and consuming it in Africa by elevating the standard of living for everyone. So that's what I agree with you. The concern is hopefully Olaf Scholz doesn't pull a Sergeant Scholz on us and doesn't see anything. Hopefully they continue down this path. But everyone's now I do love this. Now they're all focused on critical minerals. It's almost the hand over here is, minerals. While this hand over here, they're exploiting them on the entire side. So it's unbelievable.
No, it's despicable. And what really bothers me is the lack of humanitarian interest that they have. All right, let's go to gas flows to Egypt. Stop. Michael, for our listeners that missed a single podcast of the 3 years that you and I have been podcasting, this is Club Med, baby. This is what you and I have been talking about for a long time. And in the Leviathan field, we were sitting there and taking a look at the Leviathan field. Israel is running that. And then it's just south of Cyprus. And the only way that Israel can get its natural gas, just as a recap here, that they have to sell to Egypt. Egypt has extra LNG capacity. Chevron, which runs the gas field that Israel ordered shut down as another major field, has stepped up. Power cuts have been put in place since the middle of the year, but this could impact 20% of Egypt's power capacity. And then it's going to cost Israel a bunch of money not getting their gas to market.
So the cabinet has shut it down from Egypt, right? So, and what they're saying is the gas imports have fallen from 800 MCF a day to 0 at a time when temperatures are above average, which means you're going to have an increase in electrical demand. So it's not the right time, unfortunately. It's never a good time not to have fuel, but it's not a good time now.
Right. You bet. So, hey, let's flap our arms and come back around to California here. Congress must take California out of the driver's seat on electric car mandates. This is a pretty cool story. And the first paragraph is Congress is moving forward with legislation to prevent California from canceling gas-powered cars and trucks. That's about time. Now, Michael, you and I have talked about this before on the podcast, and I believe there's 18 states that have passed laws that allow once California and Oil Slick Harry Newsom can go out, and then once they get it into their legislative system, the other 18 can then adopt it without anything. So that's exactly why this is such an important bill. I thought it was pretty cool.
Nope, I think this is absolutely it's obviously this is going to pass the House of Representatives, but it's not necessarily going to pass the Senate. But it's an interesting flex of the federal versus state muscle. And
yes,
I how do I say this? I guess if the shoe was on the other foot, if Congress was trying to rein in a common sense bill that a Republican government was doing, I just wonder where we would fall on this. So as much as I love the fact that the government is now coming in and mandating what the states can do, I'm generally of the mindset that if you want to live in California and subjugate yourself to California policies, good luck. Because trust me, the Newsbeat podcast ain't going there anytime soon.
They're one of our biggest listening states, but dude, I think if we
until they fall into the ocean. because of climate change. So sorry, guys.
All right. Okay, so let's go ahead and go to the next one. I love this one picture, though. Biden looks like he's just got gas, and Newsom looks like he washed his hair for the first time in several years. Just as a real quick note here, the Texas Public Policy Foundation released a study, and it has great information. We'll put this one in the show notes as well. We don't need to go into any of it right now, but it has great EV stuff as well. So I'm going to head to the last story, Michael, and that is uranium demand hits decade high as nuclear renaissance gains traction. That's pretty cool. If we're going to get to net zero, which is what my bank account looks like right now, carbon net zero is my bank account. You sit back and kind of go, we're looking for sponsors out there, Michael.
What a way to solicit.
Oh yeah. I've got a sign on my chest. We'll work for sponsors. Rising climate change awareness is a renewed interest in energy. Now, I disagree with that one line in there. It's not we'll work for the climate change awareness. It's people don't want to, they want to be able to heat their homes and put food on the table. And nuclear is the only stable source out there if you're going to throw renewables on the grid.
Yeah, I mean,
besides
I think
that, natural gas.
What this article clearly states is that there's an overwhelming shift in the mindset of people to embrace nuclear. Now, is it anywhere near what we need to be in order to achieve what you call this renaissance of carbon net zero? No, it's nowhere close. We're going to need to continue. We're going to need to fix the regulatory. I saw, Bill Maher of all people did a 10-minute long expose on his show last week, specifically talking about articles that we have brought up on Newsbeat in terms of how much renewable energy, specifically renewable energy, is waiting in the regulatory system. There's there's thousands and thousands of megawatts waiting to be approved. If only we could get out of our own way. My only thing with nuclear is that it will end up down this path, and it's the reason why nuclear hasn't been rolled out soon. It's because they continue to die in the regulatory process.
Yep. Hey, I need to reach out to Bill, and since he was a watcher of the show, you gotta love it since he's getting his energy tips from us.
He's slowly getting red pilled. You'll see it. Give him about 5 years, and he'll switch sides completely.
I gotta admit, Bill Maher used to be just a total squirrel. Now he's only an ugly baby, and I mean he's really come a long way as far as a humanitarian goes.
I think what's interesting, though, is and not to get too off topic, but I think somebody like him has been fairly consistent over his entire career. It's the landscape of politics that has completely shifted beyond him.
Great point. I love what he's saying. All right. Hey, thanks,
Sometimes
man.
I say okay things. You about done?
I am. Hey, I love your chart behind you there, dude. You nerd.
It doesn't show much. We got markets down today, folks. S&P was actually up about 1.2 percentage points. NASDAQ goes about 1.09 percentage points, mainly off the back of some decent tech earnings. Crude oil continues to tumble, 82.67. That's down 3 percentage points after closing Friday, up 3 percentage points. So basically wiping out all of the gains we had there. And this is where I love Reuters. They got no idea what they're talking about. Oil falls more than 3% as concerns about Middle East supply ease. So, I mean, but what's the difference? We just shut in gas supply gas supply was shut in. We don't know what's going on with Turkey. If anything, tensions are more heightened in the Middle East, yet they're trying to tell us that, prices are down because we will not things won't happen. They claim traders see signs that Israel-Hamas war won't disrupt crude flows. I don't know what to say. Generally, a lot. The problem with what we're working with right now is there's a lot of geopolitical factors that are happening, and anytime in the next 3 weeks, oil and gas prices move one way or the other, the answer from places like Reuters, places like oilprice.com, it's why you don't really want to read these. It's why you want to come to here, like Energy Newsbeat, is because they're just going to tell you, well, it was down because the sentiment has moved towards less oil or sentiment towards more oil. That's okay. That is the case. But let's dig down deeper and say, what are some of these prices moving? we see a huge drop. We ended up at 84 at the beginning of the session, traded all the way down to below $82. That has a lot to do with the way the machines decide to take. Anytime you see a large, strict movement down or up, it's because the sentiment is now being ridden upon by the computers. Remember, 80% of trading is now algorithmic. So that's where, when we look at these huge movements that happen, we see 3% on Friday, 3% today, even though they were in opposite directions. What's causing that? It's a little bit of market sentiment being layered in with a large amount of machine trading, that when you aggregate small sentiment over a large amount of machines, well, unfortunately, you get these movements like this. So, be wary as you're, especially if you're trading, it's going to get spicy with these geopolitical stuff. Again, what we saw on Friday was not necessarily as we mentioned yesterday, was not necessarily hey, oil, we think oil, there's going to be no supplies. It was people covering their shorts so they didn't have any open positions over the weekend, because the last thing you want to do is be short, and then all of a sudden, a nuke goes off over the weekend and oil's $300. Now, nuke goes off, we got bigger fish to fry, so that's maybe a bad example, but that's the point of it. So, as always, we're going to come in here and dig below the numbers, and give you an idea where we think prices is going. I think tomorrow we're going to continue to see some of the same choppiness. I don't see oil flows necessarily being stopped. I mean, Stu, as we've talked about, the only thing that could really move prices significantly more up or down from here would be the Strait of Hormuz being blocked off. But I don't think you're not hearing anything that would suggest that's going to happen, are you?
No, I'm not hearing anything, but who knows?
Yeah, well, if we get a call, we'll let everybody know. If we get,
you bet.
Trust me, we will.
Wait, this is Lindsey Graham. This is Lindsey Graham calling in. Hold on. Oh, he's wanting to bomb Iran.
Great. Well, I'm telling him I don't have my we got I don't have my boots ready. I'm just kidding.
That was a joke, by the way.
It's a huge joke. The last thing we need to be doing is letting Lindsey Graham bomb Iran.
He said that on the news.
I know. It's pretty scary to think about. These people, they want to get us in a war so bad. They want to get us into a war so bad. That's okay. I think it's, we're having some earnings continue to drip out. Chevron and Exxon, the two companies that we've been talking about at nauseum on Friday, dropped their earnings. I thought it was just interesting to read some of their highlights. First, for Chevron, they go ahead and see their third quarter earnings order decrease from 2023, mainly due to lower upstream realizations and lower margins. To give you guys an idea, they had a total earnings of about 6.5 million. 6.5 million in quarter 2023, comparative to 19.1 billion in quarter three. In the third quarter in 2022. So they're down about 50%. That's year to date. Last quarter, in third quarter 2022, they were at 11.2 billion. So they're down about basically 50%. Again, the reason why they say that is to lower upstream realizations. What's that mean? Lower prices. I mean, it's pretty simple to say that. And lower refining margins, which they make a decent amount of the money on refined product sales. The big thing they did this year was go ahead and swoop up PDC Energy. So that went ahead and completed to kind of give them a stronger presence both in the Permian, but also in the DJ. They've also acquired some stakes in Aces Delta, which is a carbon capture place. They're doing a bunch of other interesting things. They've 6.2 billion of stock buybacks, which is a little bit lower than the original guidance, those were distributions of 6.2 million, 3.4 billion of share buybacks. Share buybacks, they note, were a little lower than the prior quarter, mainly due to the restrictions due to the related asset transaction of PDC Energy, which was all stocks. As you know, they just decided to purchase Hess, and so it'll be very interesting to see sort of how this now go ahead and merges together. Let's go ahead and look at Exxon. They have earnings of 9.1 billion. Compared with 7.9 billion of quarter of earnings last quarter. So they do raise a little bit, mainly due to the fact of higher commodity prices, but everybody notes specifically for Exxon and Chevron, lower chemical margins and lower realized prices on refined products where their downstream sector makes their money. They really don't mention anything interesting. They're able to keep their debt to capital ratio and a lot of their gearing ratios fairly modest, if only because the acquisitions that they made to go get Pioneer was all in stock. And I think that's the big thing to take away from this profit and loss statement, Stu, is they didn't have to tap into any of their cash reserves. They didn't have to go increase their debt at all. They were able to pick up Pioneer mainly by divvying up stocks. So, I mean, really,
that's strong.
Unlike the Oxy Anadarko deal, there's very little cash exchanged, which is interesting to note that this is going to look very good. You want to talk about the word accretive. This is going to look very accretive to cash flow when it comes down to it.
You bet. How's their PDP over there, or their production?
Oh, I mean, I think they're over. With Pioneer, they're going to be like 2 million barrels a day. I mean,
wow.
The problem with valuing companies like Exxon and Chevron is there's so much more that goes into it. It's not just the production stream. It's not just this. You got to talk about. I mean, they've got so
cash
much
flow.
Oh, it's mailbox money. I'd like a little bit of it.
Our number is
the amazing Kreskin. All right, Stu, what should people be worried about?
Well, the Fed's going to be showing up this week, kind of like the Grinch.
That Wednesday they're raising rates.
Yeah, I'm just afraid of these chowderheads. I do not know.
Trying to dig themselves out of a hole they created. It's really interesting to watch. And guess what? The consumer will unfortunately take it in the drive-through every time.
Oh yeah, that's kind of like me getting married for the second time.
Yeah, we don't want that to happen. So
no,
please, guys, but all right, guys. Well, I think it's about it. Again, appreciate everybody who's tuning in. Email us questions at energynewsbeat.com. You can connect with Stu and I on LinkedIn. But for Stuart Turley and Michael Tanner, guys, we'll let you get out of here. See you tomorrow, folks.